Number 1. The Bearish Engulfing. Picture a market that's been climbing for days. Green candle after green candle. Everyone's feeling good. Then look at these two candles right here. A small green one, and then a big red candle that completely swallows it. It opens higher than the green one closed, and it closes lower than the green one opened. That's the whole pattern. Two candles. And here's what it's really telling you. The buyers showed up in the morning like usual and got absolutely steamrolled. Sellers didn't just win the day, they erased the previous day entirely. When that happens at the top of a climb, it's often the first crack in the trend. The bigger the red candle compared to the green one, the louder the warning. Number 2, the Bullish Engulfing. Same idea, flipped upside down. The market's been falling, sellers are in control, and then, boom, a small red candle gets swallowed whole by a big green one. It opens even lower, which looks like more bad news. But then buyers step in with force and drive it up past the entire previous candle. Think about what that actually means. Everyone who sold yesterday is now underwater. In one session, buyers took back everything. At the bottom of a decline, that's often your first real sign that the selling is done. And the sweet spot? When it happens right at a support level, that's when this pattern is at its strongest. Number 3, the Evening Star. This one's a 3-candle story, and it reads like one. First candle, a strong green. The uptrend is alive and well. Second candle, a tiny little candle that barely moves, sitting up there at the top. That's the star, and that little candle is the moment of doubt. Buyers pushed, but nothing happened. The market just paused. Third candle, a big red one that drops deep into that first green candle's body. Doubt confirmed, sellers have taken over. Push, pause, collapse. That's the rhythm of the Evening Star, and it's one of the most reliable ways a top gets formed. The deeper that third candle cuts into the first one, the stronger the signal. Number 4, the Bearish Harami. Harami is the Japanese word for pregnant, and you'll see why. After a run of green candles, you get one last big green candle, and then a tiny red candle that sits completely inside the body of the big one, just tucked in there. Small candle. Huge meaning the buying machine just stalled. After all that momentum, the best the market could do is a tiny, hesitant candle going the other way. That's hesitation at the worst possible place, the top. Now, a harami is a warning, not a verdict. Smart traders wait for the next candle. If it closes red and lower, the reversal is on. Number 5, the Bullish Harami. Flip it. A falling market prints one last big red candle, panic selling at its peak. And then a small green candle opens and closes entirely inside that red body. The panic just stopped. Nobody's rushing to sell anymore, and a few brave buyers are testing the water. It's a quiet pattern, honestly, but that's exactly the point. Bottoms often start quietly. And just like its bearish twin, confirmation is everything. A strong green candle right after, and you've likely just watched the low get made. Number 6, the 3 white soldiers. This one you can spot from across the room. 3 big green candles in a row, each one opening inside the previous body and closing near its high, each one marching higher than the last. Like soldiers advancing, step, step, step. This is what real, committed buying looks like. Not one lucky day. 3 consecutive sessions where buyers showed up, pushed, and held their ground into the close. When this appears after a downtrend or a long sideways stretch, it usually means the tide has properly turned. One warning though, if the candles are huge and stretched, you might be late to the party. The best entries are early in the march, not after it. Number 7, the 3 black crows. The dark mirror. 3 heavy red candles stacking downward, each opening inside the previous body and closing near its low. 3 days, 3 losses. No real bounce in between. That's not a dip, that's distribution. Sellers are unloading with intention, and every small recovery gets sold immediately. When you see the 3 crows after an uptrend, the message is blunt. The buyers who carried this trend have left the building. Same warning applies in reverse. If the 3rd crow is enormous, the easy part of the fall may already be done. Number 8, the dark cloud cover. 2 candles. The first is a strong green, business as usual in the uptrend. The second opens above the green candle's high, a gap up looking even more bullish, and then reverses hard and closes deep below the midpoint of that green body. That's the dark cloud rolling over the sunshine. Psychologically, it's brutal. The day started at record optimism and ended with sellers holding more than half the previous day's gains. Anyone who bought that morning is trapped. The key detail is the midpoint. A red close just barely into the green body is noise. A close below the halfway line is a signal. Number 9, the piercing line. And here's the bright side of that same coin. In a downtrend, a strong red candle falls like usual. The next day opens even lower, sellers celebrating. And then buyers pierce straight up through, closing above the midpoint of that red body. Same logic, same key level, opposite direction. Start the day at maximum fear, end it with buyers reclaiming more than half of yesterday's losses. The sellers who sold that open are the ones trapped now. Below the midpoint, ignore it. Above the midpoint, pay attention, especially near support. And number 10, the evening doji star. This is the evening star's more dramatic cousin. Same 3-act structure, strong green, pause, red collapse, but the middle candle is a doji, a candle with almost no body at all, just a thin line. Open and close at nearly the same price. A doji at the top of an uptrend is the market shrugging. Buyers and sellers in perfect uneasy balance after a long climb. Total indecision at the exact spot where confidence should be highest. When the next candle breaks red, that indecision resolves into reversal. And because the doji is a purer form of doubt than a small candle, this version tends to hit harder than the regular evening star. So those are the 10. And here's the thing that ties them all together. Every single one is just a story about who's winning, buyers or sellers, told in 1 to 3 candles. None of them are guarantees. They're signals, and they're strongest at the levels that matter. Support, resistance, the end of long trends. Wait for confirmation, manage your risk, and read the story the candles are telling. If you want the bigger picture, the full chart patterns these candles live inside, check the lessons on the channel. I'll see you in the next one.